it's really individual employee driven. So the impact to businesses is not necessarily a tax deduction for businesses, but instead there's a reporting requirement on the W-2 that employers have to fulfill in order to enable their individual employees to be able to realize the tax deductions.
The Small Business Rundown is the official podcast of the National Federation of Independent Business, the member-driven voice of small business. NFIB and our members advocate to keep America's small businesses strong and independent in Washington, D.C., all 50 states, and the nation's courts.
Welcome to the Small Business Rundown, a biweekly podcast with information on independent businesses' victories and challenges in Washington, D.C. and state capitals. I'm Adam Temple, NFIB Senior Vice President of Advocacy. A new federal law includes provisions on overtime and tips that will affect small businesses. Here to explain more are Stephen Kenney, an associate at one of the largest labor and employment law firms, Ogletree Deakins, and Beth Milito, Vice President and Executive Director of the NFIB Small Business Legal Center. Stephen, Beth, thanks for joining us today.
Adam, it's a pleasure to be here. Thanks for having me.
Thanks, Adam.
In the NFIB Small Business Legal Center's recent webinar, you discussed the same topic with a lot of great information. This is a popular topic with small business owners, and today we'll follow up on some of those questions where time didn't allow. Before we get into that, Stephen, can you start by telling us a little bit about your background and the work that you do now?
Yeah, happy to do so. So in short, I'm a tax attorney at a large labor and employment firm, like you mentioned. The firm's name is Ogletree Deakins. The firm represents employers. So in my role, I handle all the taxes that arise from the employment relationship, and that generally includes state and federal income tax withholding, Social Security, Medicare, unemployment insurance, and others that are of a similar vein. So all my work is done from the employer's perspective. I help employers resolve audits or assessments from federal, state, and local authorities, and then also assist employers with compliance in areas of employment tax payments and then reporting requirements that arise under federal and state law.
Stephen, there's been a lot of news coverage on this issue over the course of the last year, going back to the campaign itself. But I'm wondering if you could just start with an overview on how the new tips and overtime provisions will affect small businesses.
Yeah, so in short, the tips and overtime provisions of the One Big Beautiful Bill are tax deductions for individuals, and then the bill also creates a tax information reporting requirement for employers. So both provisions are retroactive to January 1 of 2025 and will last through the end of 2028. If we think about it from the individual's perspective, taxpayers are able to deduct $12,500 per year in qualified overtime compensation, $25,000 for joint filers, and the tips deduction is up to $25,000 per year. For that one, married filers must file jointly to claim the deduction. Okay. Both deductions are available to non-itemizers, making them above-the-line deductions. So it's really individual employee driven. So the impact to businesses is not necessarily a tax deduction for businesses, but instead there's a reporting requirement on the W-2 that employers have to fulfill in order to enable their individual employees to be able to realize the tax deductions.
So, Stephen, if a small business receives tips from clients that they process through payroll as taxable bonuses, do those tips need to be distributed directly to staff to qualify for the deduction?
So we really just need to think about what is the definition of tips. So the One Big Beautiful Bill did not change the definition of tips. They still remain voluntary. The IRS has proposed a rule that further clarifies what constitutes qualified tips, in addition to the broad definition within the bill of it being voluntary cash or charge tips paid by a customer. The rule clarifies that paid voluntary means without any consequence to the event of non-payment. So the patron determines what is a tip. The employer doesn't determine what is a tip. So the employer may process the tip through their payroll vendor. So for instance, for credit card tips specifically, you need to process that through payroll, but it doesn't necessarily mean that they should be recharacterized to be a bonus. They should instead remain a tip so that they can be reported as a tip. And I also want to say that there are just going to be certain types of compensation that aren't going to qualify as a voluntary tip. So for instance, mandatory service charges that an employer tacks on for a party of six, if you have a mandatory service charge or an automatic gratuity, If you have a particular table at a restaurant that has a large group, those could be tacked on. And then also that recharacterized compensation. So if it's a bonus that's being determined by the employer, then it's not going to qualify as a tip. We're really thinking about what are those tips that the patron or the customer are paying independently of anything that the employer may be paying to the employee.
For 25 years, the NFIB Small Business Legal Center has fought for small businesses in our nation's courts. The Legal Center, thanks to the support of small business owners nationwide, participates in landmark court cases and serves as a resource for small businesses. The Legal Center continues to educate, litigate, and fight for a better future for small businesses across the country. Learn more at nfib.com/legal center.
Let's move on to the overtime side of things, where a lot of the questions were focused on during the last webinar. How is the overtime deduction calculated?
The overtime deduction is calculated based on the Fair Labor Standards Act, in other words, the FLSA. And the FLSA has a definition within Section 7 of the FLSA that explains what overtime compensation is. And the One Big Beautiful Bill adopts Section 7 for qualified overtime compensation. So anything that's required under Section 7 in excess of the regular rate can be considered qualified overtime compensation for the individual tax deduction. So what's important to remember is it's in excess of the regular rate. So it's that 0.5 premium. If somebody's getting paid 1.5 times for those hours worked over 40 under the FLSA, it's that half time or that 0.5 premium that's going to be reported as qualified overtime compensation.
Okay. And what about what's called double pay? Can you talk about whether the overtime deduction would apply there?
Yeah, so double pay is typically outside of the FLSA definition of overtime pay. It's either state mandated or an employer's overtime policy or part of a collective bargaining agreement, perhaps. So it's not necessarily required under the FLSA, so it's not going to fit squarely within the definition of qualified overtime compensation. That being said, double pay that's paid to an otherwise non-exempt employee under the FLSA, you could still parse out that 0.5 premium, and that 0.5 of the double time could be eligible, could be considered qualified overtime compensation, and in turn be eligible for that individual income tax deduction and fall within the information reporting requirements of the employer.
Stephen, we got a lot of questions on IRS W-4 forms. Are employees required to complete W-4s to use the deduction in 25 and in 26?
So employees are generally required to complete a W-4. So as an employer, you should be issuing forms W-4 to your employees. They should be completing them. They should be completing them accurately without changing or modifying anything on the form. Now, that being said, the Form W-4 doesn't dictate whether an employee can take the tax deduction. The Form W-4 instructs employers on how to apply the income tax withholding tables, and typically it's your payroll vendor that's applying those income tax withholding tables. And the W-4 can adjust how those tables are applied to an individual's wages depending on how they complete it, but it doesn't change whether they're paid qualified overtime compensation or qualified tips that enable them to take an individual tax deduction. Now, the W-4 does still interact with these income tax deductions because the IRS has released worksheets that are attachments to the Form W-4. Employees may fill out those worksheets, and based on how they fill out those worksheets, they may be able to take into account the individual income tax deduction that they anticipate being eligible for based on qualified overtime compensation or qualified tips. And in doing so, as they fill out that worksheet, they're going to reduce their pay period by pay period income tax withholding in anticipation of the income tax deduction that they're entitled to.
Beth, at what point do you recommend small business owners start discussing these deductions that we're talking about today with their tax professionals?
Now. So end of the year, the fourth quarter is a great time to sit down or have a call with your accountant. And I mean, there were a lot of tax changes in 2025, as we know. I mean, we have the one big beautiful bill had the big 20% small business qualified business income deduction. So small business owners should be meeting or calling their tax professional to go over all these tax changes and to make sure they're not missing out on anything. And as Stephen has discussed here today, I mean, you really want to make sure that you are aware of the no tax on overtime, no tax on tips law if they apply to your business too. And I think this was something Stephen mentioned in our webinar too that I think was a really great point is you want to be informed enough to explain it to your employees. So there's some misunderstandings about, as Stephen said, this is employee triggered. So it's going to be a deduction the employee is going to claim. I think there is not necessarily an awareness as to how this will work. So again, your tax professional should be able to help you figure out that you've got everything, the paperwork done that you need to have done this year too, and also then maybe help with messaging this to your employees.
Okay, and to that point, the IRS released a notice on November 5th, shortly after our webinar, and it provides further guidance on reporting requirements. Can you explain that notice?
Right. So the IRS is going to offer, and Stephen, feel free to jump in here too, will offer transition relief for the tax year 2025. As Stephen said, this is retroactive to January 1, 2025 for employees. The employer will not need to report anything or change the reporting requirements for tax year 2025. That will change in 2026 as the IRS updates its forms and finalizes new rules. Anything you want to add on this, Stephen?
The IRS says in the notice that they will not impose penalties for a failure to file or a failure to furnish correct information returns, in this case, the Form W-2, if the qualified overtime compensation or the qualified tips are not reported on the W-2. Now, that's great for 2025. I think we also need to think about if it's not being enforced in 2025, it will be enforced in 2026. So this is a practice run of sorts. The notice still encourages employers to report the qualified overtime compensation and the qualified tips so that the employees can then take those individual income tax deductions. Now, it doesn't necessarily need to be reported on the W-2 for 2025. It can be reported through a separate statement. You can make it available through an online portal like you may do with the Form W-2. It may be a PDF that's right next to the Form W-2 that your employees can go into your employer portal and download and then use that to take the individual income tax deduction. But what's important to remember is you've got the relief from penalties this year, but starting in 2026, as the calendar turns over to January of 2026, that reporting and tracking needs to begin in earnest so that you can then correctly file and furnish the 2026 Forms W-2.
Good point. Well, before we go, Stephen, anything else you'd like to add?
Yeah, just one note. I would just like to say that this is a good opportunity for employers to review their exempt and non-exempt population under the FLSA. So much of the qualified overtime compensation comes down to how the FLSA is being applied to your individual employee population. So if you've got exempt employees, then they are not going to necessarily be eligible for the qualified overtime compensation deduction. Your non-exempt population is going to be the primary focus for this deduction. So this is a good time to really make sure that you have that nailed down. Who are your exempt employees? Who are your non-exempt employees? That's a whole separate topic altogether, applying the FLSA correctly to your business. But this is a good opportunity or a good incentive to do so right now, to review with a wage and hour attorney or to review within your payroll system to make sure that those rules are being applied properly.
That's great advice. Beth, anything before we go?
I'll just follow up on Stephen's comment. That was great advice about the classification of employees, and NFIB has some great resources to help with doing that. We've got a wage and hour webinar and a wage and hour handbook. I think we can probably include those in our show notes. Those might be helpful, along, of course, with a link to Stephen's webinar on this topic. Thanks,
Absolutely.
Adam.
Yeah, thank you both for joining to shed more light on this issue, and we look forward to learning more.
Yeah, thank you both.
Right.
I enjoyed the conversation.
For more information on these new provisions, this episode's show notes will include a link to the Small Business Legal Center's webinar with Stephen, as well as a place to submit questions and find additional resources. And if you like this episode, please help small business owners find the podcast by giving it a rating, like, or review. Now I want to thank you, the listeners, for joining us on today's Small Business Rundown. We'll be back every 2 weeks bringing you news and analysis from Washington, D.C. and state capitals so that you, whether you're a business owner or a supporter of one, can continue to blaze a trail.
The Small Business Rundown is brought to you by NFIB, the voice of small business. You can find us at nfib.com and on Twitter, Facebook, Instagram, and LinkedIn.